Deloitte 2010 CFO survey results seeming to confirm recent positive economic data, suggesting that South Africa's recovery is here for 2010 and that it's likely to continue into 2011. So are we really looking at an economic recovery earlier than anticipated? Hugh Harrison, leader of the CFO Programme at Deloitte, joins me now. Thanks so much, Hugh, for joining us this afternoon. Well, the Deloitte 2010 CFO survey results giving us a glimpse of the economic outlook of South Africa's corporate landscape through the eyes of CFOs, particularly in the country. What exactly are we looking at here?
The South African CFOs have actually been very positive about the recession, and this was the second survey that Deloitte conducted, and last year they expected both a shallower recession as well as, you correctly said, an earlier than anticipated exit. And in fact, their expectations have been confirmed this year, with almost 70% of them seeing a positive uptick in earnings and cash flows coming through in their businesses.
Let's take a look at this picture, though, because one wonders what's supporting all the optimism amidst quite a bit of global pessimism that persists.
I think South Africa has been very fortunate. Many of the benefits that have come from counter-cyclical infrastructural spending, a very sound banking sector, as well as a lot of the optimism with the FIFA World Cup. You know, I think it would be remiss to underestimate the importance to morale and confidence that has come from that, even though potentially the earnings expectations have not been as robust as initially expected.
Let's put sustainability of that trend then under the spotlight, because as we've seen with consumer confidence and the numbers that have come out with today's FNBB, our Consumer Confidence Index, it's very easy to see a complete and a very hard fallback. So as far as sustainability is concerned, do you see this optimism tone being able to sustain?
I think there are 2 points there, Alicia. The first is that it hasn't been uniformly experienced and at very different tempos depending on the industries involved. So certainly certain sectors have benefited more than others. But I think looking forward into the future, the South African CFOs certainly believe that 2010 seems to be in the bag, with a lot of optimism for 2011. 2012 brings a market tapering off in optimism, and in fact I think there factors that are impacting that are the political uncertainty as well as the dependence that we have on the global economic recovery.
Well, we'll be looking at those two focal points in a little bit, in a little more detail just now. But before we move on, I mean, debate has been triggered around the impacts of the various economies, actually developing and developed countries alike, in applying various fiscal and spending stimulus packages. The argument is that we're creating a bubble, a false sense of economic growth and economic stability. To what extent do you see this posing a threat and a risk moving forward?
Certainly CFOs are conscious of that risk, but most of them seem to be confident that the underlying earnings and demand that is building up in the economy is sufficient to support that sustainability. So they're not unaware of it, but they don't seem to be stressing unnecessarily over that.
Yeah, we hear day in, day out, though, the fact that we need to see true structural reforms to the global economic system coming to the fore, needing to take place. What's confidence levels like around that and those necessary measures being implemented effectively enough?
I think certainly in South Africa, one of the key impacts of that will be the impact on future credit growth. And although CFOs have said that credit is still accessible, it's only really at the levels of 60 to 70% of what it was before the crisis. And even in those cases, it's with significantly more onerous concerns. So from a South African perspective, I believe that CFOs wishing to embark on major projects and investment are a little bit more apprehensive in terms of going forward and being able to access the necessary funding for that. But certainly one of the things the recession has done is also unmasked some of the structural constraints within the South African economy as well. So it hasn't just been a global phenomenon that we've seen, Alicia.
Yep, certainly putting in the spotlight some of the changes that do need to take place where they do need to take place. But it's not been, when we look at the recovery that's taken place thus far, it hasn't been uniform across the board. So are there industries that stand prone to, more of a downtrend than others, that are more at risk than others?
I think certainly that is the case. And in fact, we've seen from the mining industry perspective, half of the companies surveyed still expect negative earnings for 2010. And the second industry that really stuck out there was telecommunications, media and technology, which is also still fairly bearish in terms of going forward and consumer spending taking longer to recover than anticipated.
Let's take a look at political uncertainty, because for now, the World Cup fever seems to have overshadowed, the risks presented there. But again, temporary overshadowing is what we're looking at here. So how's the average CFO out there viewing the country's political standing?
I think CFOs are genuinely concerned, and whilst they do believe that there is a degree of predictability around government's policies, particularly the macroeconomic and fiscally prudent policies, there's a lot of uncertainty around what will happen. And the major areas of concern that CFOs raised were around corruption, potentially irrational decisions that make business certainty difficult to reach, as well as the management and governance of parastatals. And the third biggest concern for CFOs was around government's commitment to managing the education system and the impact of that on the future skills pipeline for the country.
Well, we certainly know of late PPPs have stood in the spotlight. Looking at that interaction between business and politics specifically, it stood out as a theme in this year's survey. How's that relationship being viewed?
I think business is quite skeptical of government's commitment to the relationship, and there have been various initiatives where government almost seems to have come across in a schizophrenic manner, approaching business and then kind of backing off. So I think what business seems to be really concerned about is around government's longer-term economic stability policies, and in fact supporting the infrastructure bill that's not just FIFA related but actually goes to providing the basic services, and particularly around electricity supply. There's a lot of criticism still out there and concerns around the reliability and sustainability of electricity supply at the right cost.
Well, there's a lot of optimism about, there's also a lot of uncertainty with all of that, and that being the playing field for the CFO sitting in South Africa. I mean, how's that changed the role of the CFO in the country?
CFOs have never before had such a close partnership with CEOs, and I think that has probably been one of the key consequences of the downturn. And in many cases that has placed them in the limelight. So they have really an unparalleled sphere of influence to operate and to exercise their skills. That has come at a cost, and that cost has been significantly increased stress levels, particularly in areas where there has been poor performance in the companies that they are involved with. But certainly it's been very positive for CFOs, because they certainly have the right skills and are well placed to be able to influence their companies going forward and the economy at large.